a very large social engineering attack. And so it was a threat actor that was using the institution's name to sell cryptocurrency. So saying, hey, this institution backs this cryptocurrency and we're gonna help you get in early. So it's just an investment scam, right? But there was no cybersecurity indicators. No one was touching our website. No one was logging into our accounts. They were just using our name to commit their fraud. But that's a huge brand reputation issue, right? That costs the institution money. Yeah. Customers that assumed this is linked to us, so they were potentially going to lose money indirectly through this investment scam. And it was overseas.
We are the Keyboard Samurai, podcast about the business of cyber and tech, here to help you or your business improve. Here's your host, Wil Klu. Let's hack into it now. Hey, everybody. Welcome back. Keyboard Samurai. As always, like, subscribe, all that good stuff. Share with your friends. Tell your mother. It all helps. Today, I'm like really excited about this. This is one of those times where I hope the audience enjoys it. But if they don't, I don't care, because I'm going to enjoy it, because I'm like super, like, I don't want to say obsessed, but like, it's so interesting to me, the whole like fraud and like money laundering and like criminal aspects of the financial system and just money in general. So I'm glad to have Matt, and I took away a little bit of your thunder there, but Matt, why don't you give us the 30 seconds of who you are and why we care?
Yeah, so I'm Matt Meis. I've been working in cybersecurity for a long time and transitioned that over into fraud. And now I've been full-time making sure that criminals don't win.
Nice. I love it. Oh, okay. So I want to get started. Like, let's like dig right in. Like what are like the common things in fraud that people see? And then what are the other things that maybe most of us kind of know it from television, right? And things like that. So like, what are the things that you're dealing with that are known to us and kind of like those common ones? And then what are the other things that maybe we don't think about or that you're seeing that's kind of interesting also?
Absolutely. So I'm mostly focused on the cyber fraud side. So this is an advanced way of looking at fraud, really focused on preventative measures, digital channels, just not exclusively digital. We do wander into the physical space, but I think for most people, they think about fraud and it's something that happens to them, right? And I think about like cyber fraud as a cybersecurity incident, but the objective was directly stealing money, right? It's the same thing. You look at all the attack indicators on a cyber attack, very similar on the fraud side. So I break fraud into a few different groups. We have generally scams, and there's tons of different scams that people hear about, right? There's putting like crypto scams where you put money into a crypto wallet, but it's not yours. So investment scams in general. There's so many of those. But then there's also just more specifically in the fraud vernacular, there's first party fraud and third party fraud. So first party fraud is using your own identity to commit fraud. So take out a loan, never plan on paying it back. You run up your credit bill, whatever that is. Third party is using a synthetic or a fake or stolen ID to commit fraud, and you're acting as somebody else. And so we see all of that in the financial world. It really just depends on what scam they're trying to get away with or how they're trying to make their money.
Nice. So like you mentioned, there's a lot of different scams. So obviously, and I just did a webinar with the group and we talked about like gift card scams, changing the payment, hey, a business email compromise and switch over the payment processors to the new person. What other ones are out there though? What other things should as a consumer and also just somebody interested, like what other things are out there that maybe aren't as obvious?
Well, some of the worst ones that affect people, so cash for gold type things. So
really?
You buy gold and then ship it to them. So there's multiple changes of currency. If you ever see a change in currency, whether it's actual currencies, gold, gift cards, crypto, that ends up being a really big red flag that someone's trying to launder money through you. So we see that lots of different ways. But I've seen literally a crock pot full of gold being sent through the mail. Saying, why are you doing this? And they said, well, the IRS said I had to.
Oh God, the IRS. that's the whole. Yeah, I was gonna say, because I've definitely got metals that I've ordered and had shipped to me, and my but I don't have a crock pot of gold though. That's leprechaun level stuff right there.
Yeah. So those are some of the other ones that just get kind of crazy. The ones that get a little more scary for individuals is when it's really personal. So they'll get a call or even a computer ad, and they're doing like a tech support type scam, but now they have full control of the computer, which is tough because now they have access to your email, which could be a multi-factor authentication, or they could directly log into online banking, and it is your device, it is your IP address. Your behavior is going to be different from a criminal versus the individual, but it gets dicey real quick when they have access to your device.
Well, I've seen a couple of people talk about again, some of those scams, like I don't know, there was some guy was talking about like his grandfather was getting scammed, and like, you know, it was like he'd gone through the whole process, like one click away from his whole crypto wallet going over to these people. In those cases, like, is there anything that can be done like after the fact once you've kind of been scammed out of that money?
It's really difficult. It depends on the money moved. If you put money into a crypto ATM, you're not getting it back. Now we're seeing those getting heavily regulated across the US, and that's great. There's some states that completely don't allow them, or they have really low limits. So you're not going to lose thousands of dollars, but you do that online and it goes pretty quick. With wires, ACH, or checks, there's a potential. The faster that you report it to your financial institution, the faster that they have the opportunity to recover those funds. But a wire usually happens within an hour. And if they're waiting at the other end and they pull the cash out, doesn't really matter if you ask for it back nicely. The two financial institutions involved don't have the physical money.
Right. Oh God, that's tough. That's tough. Okay, so now this is the part where I'm like really like, when you're like doing investigations, like obviously we talked about a couple of things, like, you know, I see a red flag here, there, but like, you know, specifically, let's do money laundering, because to me that's one of the most interesting ones. Like, what are you actually looking for to kind of see? Like, I understand conceptually, you know, what's happening, right? You're taking the dirty money, you're making it look clean, but I don't really understand how it happens specifically. So like, what kind of things are you looking for to say, oh yeah, this is probably being laundered? What are some of those flags, those indicators, some things that kind of tell you, oh, this is how they did it?
Yeah. So let's take a really good example. So there's two types of people that launder money: ones that know they're laundering money and ones that don't. So there's people that are laundering money, they don't even know what's happening. So a really good example is work from home scam. So they put out signs, they say, hey, call this number, we have a job for you to work from home. And they'll say, okay, you need to set up a business bank account at a specific bank that they understand their controls very heavily. So you have this controller that's working with this person that's working from home. And they'll tell them, all right, set up this business bank account. It's really using their own social, their own identity. It's a very clean account. They are easily able to get one. And they say, you're going to be our accountant. We're going to be sending you money on a regular basis. What we want you to do is when money comes in, there'll be a note saying where to move it to next. And that's helping us pay our vendors. And basically it's just moving money through their account. And then they'll say, for your pay, you'll just take a portion and move it into another bank account for yourself. So you get the money. These are your accountant. Like, we trust you to make these accountant moves. You're moving the money on your own accord. And at a certain point, that individual gets screwed over, right? So the bank's gonna say, well, we want the money back because the money that came into your account, that 10 grand last month, that's actually Joe's in Mississippi, and Joe's saying he didn't send you that money, right? That it was stolen by the controller and just moved through your account.
Now, when you say controller, is that like the bank, like people inside the bank helping that?
No, the controller of the mule. So that work from home victim is now a money mule. They're moving money through their account. They're laundering it out somewhere else, probably to 50 other bank accounts that are popped, right? And there could be 4 or 5 of those in between when the actual victim lost their money to when it got to the fraudster. So the actual fraudster is the controller. They're controlling 1 to hundreds of mules, and they're moving money through their network to help clean it and make it so that they're not the one on the hook, right? The original victim is going after the next hop.
But how does that work? Because I would think like if you're just moving it through a bunch of other personal business accounts, like you can track that. So eventually when it gets to the person who's fraudster, or do they do something with it at a certain point? Like buy
Depends on the amount of money,
Yeah.
right?
Yeah.
Right. Or if they transfer out. So you might have a hop where they say move it into cryptocurrency. You can run it through a tornado, spit it out a lot of different ways. Also, so as a bank employee, I can see inside my bank really well. I can't see inside the 5 before and after me. So as a police officer, if there's a report filed and they want to track, they can subpoena every bank, try to see where it moved. But are you going to do that for $2,000?
Right.
When you have 10 victims, $2,000 each, that adds up pretty quickly and it's worth your time. But it's not worth maybe law enforcement's or the individual's time. Sometimes the banks will reimburse at some point in the middle, and then who's the real victim, right? It gets really dicey, and trying to chase down the actual criminal at a certain point, it becomes a game of cat and mouse, whack-a-mole, whatever you want to call it.
Whack-a-mole. I love that. Well, and it's kind of like it's okay if you speed over 5 miles an hour once you get to 11. Like,
these digital crimes, 95% don't get prosecuted, and the 5 that do, they don't all get actually jailed. They just, especially if you're in a country that's not going to cooperate with our law enforcement.
And that's where a lot of these are coming from. It's the non-extradition countries or things like that.
Yeah.
Okay, so that's the unknowing one. What about the ones who know they're laundering money?
Yeah, so those can get really good, and there's a lot of indicators that are interesting. Certain types of lines of business are very cash heavy. So if they're literally laundering cash, but most aren't, they're just doing this digitally. So the ones that are knowingly laundering will usually use a synthetic ID or a stolen ID to get a nice squeaky account. They'll wait a little while. So they'll wait 60 to 90 days, make sure that the account looks not new, do some regular transactions, and then they'll start slowly, incrementally moving funds through. Maybe using Zelle, incoming, outgoing. They know limits, so they'll say, okay, at this organization, they start getting uppity after you get over $2,000. At this other one, they only care about a CTR, which is $10,000. You have to report cash movement, and it doesn't have to be one time 10,000. You could have 5 $2,000 transactions that would count as a CTR as well. So a lot of the AML systems are really heavily rule-based to say there's a certain amount of money movement in and out that's inconsistent with the type of business, the type of individual, things like that.
Well, and that's what I was going to say. Is there like heuristics to it where, because for some people moving $10,000 in and out of an account a day is not a big deal, but for others it is.
Especially if it's a business, right? That makes a lot of sense, and it makes sense. But structure. So in the AML world, they call it structuring. So they can say, we can see you did a $4,900 transaction, and then another $4,900 transaction. And yes, it's under the CTR limits, but it's suspicious. Right? Fraudsters are trying to get as much money as possible in 1 or 2 pops to quickly have access to those funds. They don't want to get caught. Money laundering over a long period of time, it gets a little more interesting, because usually it's the accountant at a church or the accountant at a business where they're slowly siphoning off some funds, and it looks completely normal. Those can last, I've seen 20, 30 years where someone's just slowly taking money that it looks like normal transactions after a certain period of time.
Right.
You're never going to catch it until someone else is, checking over their work.
I guess from my perspective, if I think about, like, to me, the cash thing makes sense, right? Most of us have seen Breaking Bad. You sit in front of the cash register and you press a button, and then, I sold a car wash, put the $10 in, it's clean, right? Really easy. But everything's digital now. And I feel like, as somebody who worked in the service industry, at the end of the day, your till has to match, right? So what is it the accountants are actually doing because it's not real money, it's just numbers on paper, but if they don't match up, like how does that
So everything does match. The money is going somewhere. It's just who's noticing, right?
Oh.
So most of the criminal money laundering isn't a business front that the mob running, and they have a really good way to clean it. It's mostly someone creates an account to, when they are able to take over someone's legit account, they'll move money through it and then get it out quickly. So most of our money laundering is that, where there's an account takeover somewhere, a mule or mule network, and then they cash out at the end. And they
so way more like okay, so it's a lot less. We're mattress stores and pizza shops.
It happens. It happens. It's just those aren't as common, and those end up being months before you really find it, because you have to see the history of the account and see what they're really doing with the money.
Right.
And there's things that just aren't consistent, and especially once you start getting wires or something where hey, we want to move 40,000 to Hong Kong. Why? Well, we're putting siding on our, like, I've literally been told we're putting siding on the business. Why are you paying a company in Hong Kong to put siding on your business? Right.
So I love that, but I also, on the other side of that, like, I have this thing that's like, it's my money. Why are you asking me what I'm doing with it? Right.
Oh yeah, it's a fine line. So we call that friction, right?
Yeah.
And it's what's the right amount of friction for your customer. And there's been a lot of policies where I'd love to put this in, and the friction level just doesn't support it. So we have a lot of these risk-based decisions to say how much friction is worth it, and how much customer experience will be hurt.
Right.
So that's
because I know, like, back when I was younger and I would get like my tuition return checks, and it was like $2,000 or $5,000, which for me at the time was like a lot of money, and I usually needed it right then and there, and the bank's like, no, we have to hold it for a couple days and valid. And I'm like, but it's my money. Just give it to
me. Checks, right? Checks are easily forged. A lot of systems, you could take a picture of toilet paper and send it up to online banking. And as long as it has an amount and it's going into your account, it may not be cut. So it's really about how do we put the guardrails in.
Go ahead.
I'm going to stick on the check fraud side, because there's kind of two interesting things with that. And this is where digital and like cyber and regular fraud ops get together. One is mail theft is a huge one. So we have fraud intelligence all the time looking for stolen credentials, but also stolen mail. And so we see posts of check images, and we'll proactively stop those checks, work with the customer to make sure that they understand what happened, and go on our merry way. So that's one piece of it. The other piece is the fake checks that people are either remote depositing or depositing in person. And if we don't wait long enough, we can't know if it cleared, and we lose the money. The biggest thing we had problems with were treasury checks, because they're guaranteed by the US government. You could get a real treasury check, change the name on it, and cash it. Checks only have the account number of where the money's coming from. Where it's going to, it's a promise.
Oh.
It's completely not binding in any way. I could set up an account in somebody else's name if I can get enough of their identity and cash that check, right? It's not going to an actual bank account. It's going to a name, which could be anything.
Okay, so like that makes total sense to me, but that sounds like a lot of work, because as a criminal, I have to, like, who's going to get a treasury check? Like, how am I even figuring that out? And is it going to be big enough and worth my time? And how much prep work is it, like, or is it a numbers game?
Until this year, a lot of people got treasury checks. Every social security check that is mailed, every tax return that's mailed, that doesn't go out of. They've changed it. They're not doing checks as much for those kind of things. So, but if you just opened any mailbox, like the big blue boxes in across the US in, I don't know, let's just say March through June, you're gonna treasury checks.
I like to pride myself on thinking like a criminal, but again, I don't ever think about stealing money. I always think about like the bad things you can do with technology. So
which is I mean, adjacent. I mean, I think of any cybersecurity idea, it fits right into how we talk and fight fraud.
Right. So you mentioned the like you've got I'm going to say it wrong, but like we have a kill chain MITRE attack. We have like a framework. And you said there's something similar too for like when you're looking at fraud and things like that.
Yeah, absolutely. So FSISAC, so this is Financial Services Information Assurance Center, just came out with a cyber fraud kill chain. And so it's very similar to MITRE ATT&CK, where they have very specific sets of the kill chain from the original recon to post theft, and so anything in between. And so we've been mapping our fraud losses against pieces of the kill chain. We'll say exactly which part of the kill chain we stopped it at if we didn't have a loss, or if we did, how they went through that kill chain, right? What was the actual recon that was done? What was the compromise? What was the financial instrument that was used, and so on. Nice. And with that, then we can say where our controls need to be beefed up, or where they're actually really strong, what consistently is stopping the losses. So
that's cool.
Yeah.
So let me ask you this at the end here. What's like the biggest thing you've broken up that you can talk about? You have to give the details.
Yeah. Well, so there was an interesting at a previous financial, and I was just tangentially part of this, but there was a very large social engineering attack. And so it was a threat actor that was using the institution's name to sell cryptocurrency. Just saying, hey, this institution backs this cryptocurrency, and we're gonna help you get in early. So it's just an investment scam, right? But there was no cybersecurity indicators. No one was touching our website. No one was logging into our accounts. They were just using our name to commit their fraud. But that's a huge brand reputation issue, right? That costs the institution money. Yeah. Customers that assumed this is linked to us, so they were potentially going to lose money indirectly through this investment scam. And it was overseas. So it was kind of hard. So and the funny thing is they were having these lavish parties, and they were posting on YouTube and repeated website takedowns to try to get through to them. Eventually they decided to go to Japan, and it was, we could see that they were going there. We were able to work with local law enforcement, and they were done. And so it was kind of one of those things where it wasn't your traditional cybersecurity or fraud attack, but it had both of those things,
right?
On the social engineering side.
It still comes down to like social, it's social awareness. Well, so now I have to think too on that point. That's where threat intelligence comes into place. Like you should, if your bank or your institution is being used as a fake shill to you should know about that. Like that's data that should be obvious to you.
Well, and this is where like cybersecurity, fraud, and cyber fraud and marketing can work together, right? Brand matters. So we look at marketing as a opportunity to partner and get new tools. Do you want to understand how people are coming to your website, or do you want to stand out? People are talking about you out on the clear web, dark web, deep web, whatever it is. You want to know, good or bad, threat actor or past customer, current customer, what they're thinking and what's happening.
That's interesting to me too, because now this is a complete tangent. As somebody who's working on like AEO content, like having AI return my company when you search for, hey, I want a managed services company, blah, blah, blah. I'm like, okay, but now there's like, well, okay, can we we can absolutely, because we're monitoring that. But now can we look at, hey, I know, I hope nobody's going, hey, how can I use Bank of America to fraud somebody out? But like they might be like, so I think you're going to get some IOCs on reconnaissance now through AI, maybe.
Even simple ones, Reddit threads. There's Reddit threads committed to crime, and there's plenty of Telegrams and Signal chats that are fairly open, where you can get that intelligence quite quickly. So fraud intelligence and cybersecurity intelligence meld and get really interesting results pretty quickly.
Oh, that's awesome. Well, man, I appreciate you. This has been awesome. I could probably talk for longer, but people are getting bored, I'm sure. No, not really. This has been really great. Matt, where can people find you on the interwebs should they want to?
Absolutely. I'm on LinkedIn, and I have a newsletter, Sec Fraud Ops newsletter. We talk about security, fraud, operations, and all things in between, including some AI. And then I wrote a book a couple years ago called Survive Online. So that is very specific to, you have a family member that really needs to understand password hygiene or the basic things they can do with their network. It gives some tips and hints and resources for you.
Nice. That's great. I'm going to have to go subscribe to your Substack too when we get out of here. All right, man. Well, thank you so much. This has been great, dude.
Absolutely. It's been great. Thanks for talking to you.
See ya. Thanks for listening. Be sure to like and subscribe. Follow Wil and the podcast on LinkedIn /Wil Klu. Visit wilklue.me for information on services he offers to help your cyber or tech business grow. Until next time, Synaculator.